You are not watching an oil story, you are watching a timing story. Because the modern world does not break when it runs out of resources. It breaks when critical resources stop moving at the speed the system expects. That is the real danger now, not that the planet suddenly has no oil left. Not that every barrel disappears in 2 weeks. But that one of the most important arteries in the global energy system is under severe stress, and once flow breaks, everything built on timing starts to shake. In 2024, about 20 million barrels of oil moved through the Strait of Hormuz every single day, roughly 1/5 of global petroleum liquids consumption. Recent reporting says the current conflict has severely disrupted that route, pushed oil prices sharply higher, and left traders, shippers, and governments scrambling to price a risk they spent years pretending was manageable. That is the part that matters. The machine is no longer theoretical. It is now under pressure. And once that happens, the countdown does not begin in oil fields. It begins in shipping schedules. It begins in refinery intake plans. It begins in insurance markets. It begins in diesel inventories. It begins in freight contracts. It begins in the silent assumption that next week will function like last week. That assumption is how complex systems die, because civilization is not powered by reserves in the ground. It is powered by uninterrupted flow, by tankers arriving on time, by pipelines staying open, by refiners receiving the correct crude grades, by trucks getting fuel before supermarket shelves go thin, by financial confidence staying just high enough that panic does not outrun supply. And when a choke point starts freezing, the first thing that disappears is not oil, it is certainty. That is why governments hold emergency reserves. The IEA requires member countries to hold emergency stocks equal to at least 90 days of net imports, because the modern energy system is known to be vulnerable to sudden disruption. The stockpile itself is a confession. It exists because the normal system can fail faster than the public is told. So when people hear a phrase like 14 days, they imagine apocalypse. They imagine the world going dark. That is not the real threat. The real threat is faster and more believable. Within days of a major supply shock, markets reprice. Within days, tanker routes distort. Within days, war risk premiums rise. Within days, storage mismatches appear. Within days, refiners start calculating feedstock risk. Then diesel tightens. Then freight tightens. Then food and manufacturing feel the pressure. Then politicians start calling an obvious structural failure unexpected. And that is when the public finally notices what was true the whole time. This was never an accident. It was a pattern. The pattern is simple. First, a civilization builds itself around cheap and reliable energy flow. Then, it expands that system until efficiency replaces resilience. Then a disruption hits and reveals how little slack really exists. Then, emergency action begins only after the damage is already spreading. That pattern is older than any headline and more reliable than any expert panel. Different countries, different wars, different excuses, same machine. Look at 1973. The developed world had rebuilt itself after World War II on the assumption that oil would remain abundant, affordable, and continuously available. Transport expanded, manufacturing expanded, suburban life expanded, food distribution expanded. Finance treated stable energy inputs as normal. Oil was no longer one sector inside the system. It had become the bloodstream of the system. Then came overexpansion, more cars, more highways, more industrial throughput, more dependence on imported crude. The system looked powerful, but it was growing taller by becoming thinner. It was becoming efficient in the exact way that makes a network fragile. Then came the shock, the Yom Kippur War, the Arab oil embargo. A geopolitical conflict suddenly became an energy weapon. Supply tightened, prices surged, and long lines formed at gas stations. But the visible panic at the pump was not the real event. The real event was the collapse of a belief, the belief that energy flow was guaranteed. Then came the outcome: inflation, slowing growth, policy panic, stagflation, and finally institutional response. The IEA itself emerged from that crisis because the world had to admit that the system was structurally exposed. The reserve system was not created because leaders were visionary. It was created because the machine revealed its weakness in public. Then the pattern repeated in 1979. The world still depended on oil just as deeply, but told itself it had learned enough from 1973 to manage the risk. That is always how stage 2 sounds. Not safety, management, not resilience, confidence. Iran under the Shah was treated as a major pillar of global supply. Its production was built into expectations. Consumers far away treated that stability as permanent because distance always creates complacency. If the dependency is far enough away, people convince themselves it is not really dependency at all. Then the Iranian Revolution disrupted output and exports. Fear spread faster than barrels disappeared. Panic buying intensified the shock. Market psychology did what market psychology always does in concentrated systems. It amplified the physical problem. Once confidence broke, inventories stopped acting like a buffer and started acting like a battlefield. Then came the inevitable outcome: another oil spike, another inflation wave, another hit to growth, another reminder that the architecture itself was the problem. The trigger changed, the machine did not. Then it happened again in 1990. By then, the world economy was even more integrated. Trade was deeper, finance was faster, markets looked more sophisticated. But sophistication is not immunity. In fact, complexity often hides vulnerability better than simplicity does. The Gulf remained central. Export concentration remained high. The world had more tools, more data, and more confidence, but still no true insulation. Then Iraq invaded Kuwait. Immediately, the market understood what the public usually understands too late. The global energy system still depended on politically unstable concentration points. Prices jumped, fear widened, governments moved into emergency posture. Once again, the world was forced to confront the difference between market elegance and physical reality. And once again, the system survived only because extraordinary measures were used to stop the cycle from finishing on its own terms. That is the key lesson. When the pattern is interrupted, it does not mean the pattern was false. It means the response was big enough to contain it. Now bring that exact pattern into the present. First, the foundation. The global economy still runs on oil far more deeply than public language admits. The IEA projected global oil demand around 4 million barrels per day in 2025. Yes, electric vehicles are growing. Yes, renewables are expanding. But the basic operating core of the world, freight, aviation, shipping, petrochemicals, heavy transport, agriculture, mining, militaries, backup systems, still depends on massive hydrocarbon flow. This is not a post-oil world. It is an oil world with newer layers added on top. Check. Second, overexpansion. The modern system optimized for speed, not slack, for efficiency, not resilience, for just-in-time logistics, not strategic redundancy. Supply chains stretched across continents. Refineries were tuned to specific crude streams. Shipping concentrated through a handful of choke points. Inventories were minimized to protect margins. And all of this happened inside a debt-heavy global economy. The IMF estimated global debt at about $251 trillion in 2024, above 235% of world GDP. That matters because leveraged systems absorb shocks badly. When energy costs jump, they do not hit a patient, cash-rich world. They hit a world already locked into payments, refinancing, subsidies, and fragile growth expectations. Check. Third, loss of control. This is the stage people always underestimate because they still look at oil like a commodity instead of a flow network. The Strait of Hormuz is not just another route on the map, it is one of the central valves of the world economy. The EIA says about 20 million barrels per day flowed through it in 2024, equal to roughly 20% of global petroleum liquids consumption. Reuters has reported severe disruption to flows during the current conflict, with producers, shippers, and analysts warning that if the paralysis continues, prices could move far higher. Check. And here's where retention in the public story gets lost. Because most people watch price and miss sequence. The sequence matters more than the price. First, the artery clogs, then tanker traffic slows, then war risk insurance jumps, then cargoes cannot move normally. Then storage fills in producer nations. Then production cuts begin because there is nowhere for the output to go. Then refiners elsewhere begin recalculating supply risk. Then diesel becomes more dangerous than crude because diesel touches everything. Then trucking, shipping, agriculture, construction, and food distribution start carrying the shock into daily life. That is how a physical interruption becomes an economic event. Not all at once, but quickly enough that denial becomes useless. Recent reporting already shows parts of that sequence appearing. Reuters says Brent has surged sharply and flows through Hormuz have been severely impaired. Other reports say storage pressure is forcing output decisions in Gulf states. This is not the final collapse. It is the opening crack in the coordination system that keeps the global economy looking stable. Verified. Now the final stage starts to form. Emergency measures. This is where elites try to reframe structural fragility as temporary turbulence. Reserve releases get discussed. Naval protection gets discussed. Diplomatic corridors get discussed. Market participants start praying for rerouting capacity that does not fully exist. Everyone suddenly rediscovers how physical the energy system really is. The United States still has a strategic petroleum reserve with hundreds of millions of barrels of capacity authorized, and IEA countries still maintain emergency stock obligations. But stockpiles are not teleportation devices. They do not erase delays, insurance freezes, tanker shortages, refinery mismatches, or political hesitation. A reserve can soften a shock. It cannot make a choke point irrelevant, undeniable. That is why the next 14 days matter. Not because the world will run out of oil in 14 days, but because in 14 days you can learn whether the system still has command of the sequence. If shipping normalizes, fear can cool. If shipping stays distorted, pressure compounds. If reserves are coordinated quickly, contagion can slow. If leaders hesitate, the market will move first. If diesel tightens, the public will feel it faster than any official statement admits. If food and freight start repricing together, the energy crisis stops being a sector story and becomes a social story. That is the real countdown. A countdown to whether this remains a severe disruption or becomes a full transmission event through the global economy. And that is where most people still get trapped by old illusions. They think American power can override physical bottlenecks. It cannot. They think modern finance can smooth over logistical fractures. It cannot. They think technology can instantly substitute for jet fuel, diesel, petrochemicals, shipping fuel, and agricultural energy inputs in the middle of a live crisis. It cannot. Long-term innovation is real. Short-term substitution is limited. That is the mistake almost every late-stage system makes. It confuses future possibility with present capability. It mistakes ambition for infrastructure. It mistakes transition headlines for operational reality. But choke points do not care about narratives. Tankers do not move on optimism. Refineries do not run on slogans. And markets do not wait for the public to emotionally catch up. So what do you actually do with this? First, stop watching this as an oil story and start watching it as a system story. Watch tanker movement, watch insurance costs, watch refinery commentary, watch diesel spreads, watch emergency stock decisions, watch freight rates. Because once those pieces start moving together, the broader economic effect is no longer theoretical. Second, understand that the danger is not simply scarcity. It is synchronization failure. Modern civilization is built on tightly timed movement. A disruption does not need to be permanent to be damaging. It only needs to arrive faster than coordination can respond. Third, reject the comforting phrase that has buried entire societies in slow-motion denial. This time is different. It is not different because the technology is newer. It is not different because the spreadsheets are better. It is not different because central banks are more sophisticated. It is not different because people have heard the word resilience more often. If a civilization builds itself on concentrated energy arteries, maximum efficiency, long supply chains, and debt-saturated growth, then eventually one interruption reveals the truth of the entire design. That revelation is not bad luck, it is diagnosis. And that is what makes this moment bigger than a weekly oil chart. Because what is being tested right now is not just the price of crude. It is whether the global system still has enough slack, enough coordination, and enough physical control to absorb a major choke point shock before it spreads into inflation, transport stress, food pressure, and political panic. Maybe it does. Maybe it does not. But the next 14 days will tell you much more than the last 14 years of reassuring language ever did. So stay close to this story. Because the real issue is not whether the machine looks strong in calm conditions. The real issue is whether it can stay stable once one of its central arteries stops behaving normally. And if you want the next piece, watch the next video. Because that is where we go deeper into the structure beneath this crisis. How the global energy machine was built, why choke points became more powerful than politicians, and what happens next if emergency reserves fail to restore confidence before the damage spreads. See the structure early, and you see the future early. Miss the structure, and you only understand the crisis after it has already reached your life.